Hey guys, Mike here. So today I'm going to talk about three things, or what I call a trifecta, that is going to have a massive effect on the stock market coming up here very soon. I've never seen these three things align in such a short span. All three will probably happen within the next 30 to 40 days at the most. And so, you know, it's one of those things, especially when it involves our government. We all know our government can't walk and chew gum at the same time, and nor do our officials actually work together across the aisle, which is what this is going to actually take to get one of these done. Actually, two of them, as a matter of fact. And so, you know, that's a big thing. And neither one of these three things actually has to happen. What has to happen is the perception that one of these might actually take place. That's all it takes to send the market down, okay? That's the way it is. And then, of course, you know, our government officials like to get things done at the last minute, of course, and so that also causes damage to the economy and everything else. And I'm going to show you that. And so, you know, if you get anything out of it, I'll ask you hit the like, subscribe button for me, guys. Really appreciate that. And let's go ahead and get into the first one. And the first one's the debt ceiling, right? Janet Yellen's already warned us that if they don't get this done by October, we could default on the debt, which I'll kind of talk about that in a minute. But right now already, the Treasury has been using its cash surplus to make payments since the suspension of the debt ceiling expired last month, and has employed extraordinary measures. And what does extraordinary measures actually entail? Well, so far the measures include a suspension of certain investments in the Civil Service Retirement Disability Fund, the Postal Service Retiree Health Benefits Fund, and the Government Securities Investment Fund of the Federal Employees Retirement System Thrift Savings Plan. So they're not doing anything with that right now because, well, they don't have the money to spare. And she's warned them, like every Treasury Secretary in the past, which is, if you guys don't get this done, you keep delaying this, it will absolutely cause irreparable damage to the U.S. economy and global financial markets being the key there. And understand, we have gone through this several times. It's always usually a battle, and some have been worse than others. And I think what we're looking at here, to me, is the 2011 battle we went through when it comes to the debt ceiling. And why do I say that? Because the same players are in place in the same kind of positions here, okay? And, you know, one of those guys is Mitch McConnell now. He's obviously the Senate minority leader, and he's made it very clear that there's going to be a fight over this. That's just the way it's going to be. And then you got Democrats on the other side saying, no, we're going to pass our $3.5 trillion package, and Mitch McConnell says no. And the one thing, you know, he was in the same position back in 2011 where he was the Senate minority leader back then as well, and he always has his troops in line. And he wanted a lot of cuts, and in this case, I don't even think it was cuts. I think he doesn't want that $3.5 trillion stimulus package to pass, which I don't blame him. That's kind of crazy, but you know, the battle lines have been drawn already, and so you know, it gives me deja vu of 2011 already. Okay, and so you know, if you look at what happened in 2011, it's simple. Let me line this up for you. It's the exact same time frame we're going through now, where they basically went through all summer. And the Treasury Secretary warned them, you got to get this done, or there's going to be a lot of damage to the economy and the stock market. All right, the stock market is not like uncertainty. So, of course, you know, they start going back and forth. Oh, we got a deal. We don't have a deal. We got a deal. We don't have a deal. Blah, blah, blah. Well, of course, what happens? As you can see, we end up doing a major sell-off of almost 20% right there over a 75-day period. And what's even funnier about this is they wouldn't sign this bill they had in front of them until August 2nd. They finally got it done, which is right there. Of course, we're already selling off at that point in time. The momentum's already behind the sell-off. The computers are running things by then. So, of course, everything's getting triggered, all the stop losses, and it heads straight down. And one thing we learned out of this was a famous Mitch McConnell quote right after this was done. He said, what we did learn is this: it's a hostage that's worth ransoming. And of course, who's he talking about ransoming there? The debt ceiling, right? Both parties love to use the debt ceiling as a bargaining tool, right? With the party who's actually in charge at the time, because nobody wants to be known as the first party to default on the debt ceiling. It'll make you look terrible. You go down in history books, and it would be catastrophic for this country like nobody's ever seen if we actually default on the debt, okay? And so, you know, he's done this before. The other side's done it too, and so you know, it's one of those things that you love, and it gets worse and worse every year. I mean, if you just Google debt ceiling battle, you'll come up with they're already writing the stories right now about it. Every day, new stories are coming out about it, going, here we go again, right? And so, you know, the one thing, and you saw it there, the market will start to sell off before that. If they try to wait to get to the deadline again, which truth is, they don't even know what the deadline is now. They know it's October, right? But they don't have an official day because now they might be sending more stimulus checks out. And it's just so much stuff going on now that wasn't going on in previous years as far as how much money we're sending out to us, the citizens, and stuff like that. And so, but if they try to do that again, yeah, you can almost guarantee the market's going to sell off before it starts to happen. And then the momentum's already going to be heading south. All the stop losses are going to be getting triggered, and then they'll finally sell or sign the bill, probably is what's going to happen. But the other thing that's most likely going to happen right after that, which happens usually almost every time we do this, is our debt will be downgraded by Standard & Poor's or whoever because we become more risky, right? And so we'll have to pay more to actually borrow. Right, and then of course some people might think twice about actually borrowing or buying in and buying our debt there. So that's something to think about as well. And so that's like the first leg of the trifecta, and you can guarantee it's going to be a battle. It's nothing easy is going to come with this. You can guarantee it. People are dug in on both sides. Okay, and so the second one, which actually has to happen, I think before this one, believe it or not, is this right here. And so before October 1st, Congress needs to pass an emergency budget bill to avoid a government shutdown. And so that's right. Now we have to have Congress not deal with one, but two things pretty quickly here, right? We're halfway through September. So they have to pass this to avoid a government shutdown, which anybody who lived in this country long enough knows we've been through multiple government shutdowns already when they can't get their act together. Then on top of that, you got the debt ceiling, okay? I think they're guesstimating October 15th, but they can't really give an exact day because I said all the payments that are going out and things like that. And so, that's two big things, and I just can't imagine, them being able to do one of these two things. But then the third thing, which we've been dealing with, goes to the Fed, right? So now we got the Treasury, we got Congress, and here's the Fed, right? And so I want to read you these two passages, and you tell me, and think about this, where have you heard this before? Okay. The trouble in the market began early last week when investors focused on a number of lingering concerns. If the economy gets much stronger, it could touch off inflation, which has been mysteriously missing for the 9 years of the post-crisis recovery. That could force the Federal Reserve to raise interest rates faster than planned. Investors have also been nervously watching the bond market, where yields have been creeping higher. As yields rise, bonds offer better returns, which makes them more attractive to investors compared with risky stocks. And so, of course, you're thinking, well, that's now, isn't it, Mike? Isn't that what we're talking about? Nope. We're talking about 2018, where the Dow suffered its worst point drop ever at that time. And if you look over at TradeView at the S&P here, you can see the S&P dropped over 11% over a 67-day period over those concerns, at least what the institutions say they sold the market off for. And I mean, look at this trifecta, okay? By October 1st, which is 2 weeks away, they got to have this emergency budget bill passed, right, to avoid a shutdown. 2, here you go with the debt ceiling right after that, okay? 3, already got these concerns we're talking about with the Fed tapering, which we've talked about now for a couple months. And we don't have to worry about interest rates. We know those are off the table until next year, we assume. I mean, obviously we got our CPI data out today, and it's slowed a little bit, but it's still extremely high, as you guys got to see. But still, they're already talking about they're going to be tapering and slowing down the bond purchases and the mortgage-backed security purchases. So, that, and when that gets announced, you get a hit, all right? And that could be getting announced in October, some people project. Could be in November. But, you're talking about 3 back-to-back things here in what is already a rough month of September. And I've told you, go back to your charts. Look at the S&P over the last decade. 24.8% of sell-offs of greater than 5% start in October. And so we'll see if we can even make it to October. But, and then Jim Cramer come up with a good point when he showed in the show the other day. After September 17th, market goes down, right, historically. And then, of course, by year end, it's higher than it was, right? But you have that, like a 30-day window there. It's really tough after September 17th. And so, and then more importantly, though, just to depend on our government, God, man, I don't know how you guys have any faith in them. I mean, we've been through this so many times, and the mess. I mean, remember at Christmas we shut down, and like federal employees weren't even getting paid during all those holidays? I forgot what they were even fighting about. But it's always something, right? And then the fact that they go up to the last minute, and it's going to cost us, it already every time now, because of all these debt showdowns, we get downgraded and we have to pay more to borrow money, right? And so, it's going to be interesting times, guys. It's going to be, it's like riding the rapids to me. That's what I look at this as, going, wow. I mean, for us to depend on our government that much to keep this stock market up, man, I mean, I just can't even imagine. I don't know. Give me your thoughts down in the comments and let me know what you think. Let me know if I missed anything, you know, and let me know if you have faith the government's going to get this stuff worked out ahead of time, and so we don't have to go up to the last second. So anyway, hope you guys got some out of this. Hit the like, subscribe button if you did. I really appreciate that. And of course, don't forget to hit that link down the bottom and open you up a BlockFi account where you can buy your Bitcoin and Ethereum, as well as earn interest up to 4.5% on your cryptocurrencies, 7.5% on your stable coins, and open up that cool new Bitcoin credit card they have there where you can earn Bitcoin on every purchase, as well as take out loans on your current cryptocurrencies that you own with BlockFi.